Startups that succeed are those who find a sales process that works more often than not. And if you do not, everything you spend in sales and marketing at best will give you that.
What you want to do in marketing is you want your people to have an understanding of, I need to do this because it contributes to the whole in this way.
From Orion X, this is the Marketing Podcast. Marketing has transformed in significant ways. More technology, more data, more social, more blending of arts and sciences, more integrated with every other function, and ultimately more critical to the organization. Join Shaheen Khan and Doug Garnett as they discuss news and happenings in the world of marketing, from the boardroom to customer programs.
Hello, everybody. Marketing Podcast here once again, episode 25. This is Shaheen Khan with Doug Garnett. How are you, Doug? Great to connect again.
I'm doing well, and you have power back on, I believe, right?
I do. I do, yes.
So tell me how it is living in the Silicon Valley, the center of all that is modern.
That's right, the heartbeat of digital economy. And we had storms here, pretty strong storms, very high winds. And it did topple trees and poles and electric poles and telephone poles and all. So, part of that is like par for the course, but it's taken the utilities a really long time to fix things. There are parts of the Silicon Valley that are still without power. And this is coming up to about a week after the most recent storms took place. And when you look at what they have to fix, it makes sense, but it also points that we're not as prepared as we'd like to be, and our risk management continues to be deficient, if you ask me. But going without electricity in the heart of Silicon Valley for 4, 5, 6 days is absolutely an unreal experience.
I could imagine it's probably a bit like going without banking in the Silicon Valley for 4, 5, 6 days.
That was my joke. We have no electricity, no internet, and no bank. But thankfully, everybody got made whole over there, as much as it raises some issues with financial policy. And then it also pushes you towards solar, pushes you towards more self-sufficiency in that manner, at least as it relates to electricity. The internet, if you don't have your ISP, you probably need a really good data plan on your phone. So there are ways of being resilient, but fixing baseline electricity is really a revelation to me. What do we have on our docket today?
All right. Well, as we discussed in pre-show, I think it's time for a new segment. And that new segment is the cartoon of the week.
Right
and,
on.
So we're going to introduce the cartoon of the week. Play the music. All right, there we go. We got the cartoon of the week. This week, the cartoon of the week comes from the Marketunist, which if people know who he is, a guy named Tom Fishburne, they know that he does some really brilliant cartooning that's very business-oriented. And so in today's cartoon, it's got a group of people looking at a whiteboard, and it has a dotted line showing the anticipated forecast. And, of course, the forecast trends up. I mean, what a surprise. But the forecast goes way up. And then there's a red line on the board that says actual that starts at the beginning of the forecast and stays at that level all the way across. And our probably manager says, well, we don't appear to have a product market fit, but maybe that will change if we just raise millions of dollars. Which I thought, boy, I think we've seen this in venture funded businesses lately. A lot of, well, if we just had more money, people would care about our product. But it does raise this issue you and I have talked about a bit, which is about product market fit. And it's become a heavily discussed topic. A lot of thought and effort goes into it. I don't get the sense that we've really found a way yet. What do you think?
Well, the way it should be done, and the way I think that the more centered VCs enforce it, is that there's a phase in the funding process where product market fit is exercised, and you don't really make it to the next phase if that doesn't pan out. And on many occasions, I see startups having to pivot or having to take a piece of the product and focus on that to make sure that there is better product market fit. And that has to happen way up front. Usually VCs don't spend a lot of money on a project, a product, if that isn't already demonstrated.
Right.
So I don't know many occasions where you just pour good money after bad in the hopes of finding product market fit. I do believe that startups that succeed are those who find a sales process that works more often than not. you raise as much money as you need until you find that. And if you do not have a sales process that works more often than not, everything you spend in sales and marketing at best will give you that. That would be the objective of investing in sales and marketing, is to find that sales process. And for that, you could see that maybe more money can open more doors or more avenues or allow you to experiment more widely, but not product market fit.
Yeah, I agree with you. I think it's tough. I actually have some concerns about the term product market fit as well. Because really what it seems to me is they're asking the question of, is there any demand for the product?
Exactly.
And that is fundamentally the question, which is more of a market question some days than a product question. And I don't mean to dismiss the product portion of it, but because they really have to go together. On the other hand, they're asking a fundamental marketing question of, is there any demand? Does anybody really want this? And that is one that I've worked with a lot of entrepreneurs, and boy, everybody comes in fully believing in their product. And I've seen just kind of crazy pitches for stuff that clearly, from my experience of customers, nobody's going to want it. Or certainly they're not going to want it at the money that they're going to have to charge for it. And, they get lost there. But entrepreneurs, and I think startup founders, I think the fake it till you'll make it idea has influenced a lot of startup founders to kind of act like they've got a great idea, even if they don't. I mean, on the venture side and on side like you and me who advise people, we have to build some kind of bullshit meter that gets past that to kind of get into the serious. Is there going to be demand for this product?
Right. Does the market have a pain point? And does this product address that pain point?
Right.
And is that pain point significant enough for people to want to pay money for it, to solve it?
I kind of look at demand is that you have to have enough people willing to pay enough money for the product for you to make money.
That's right.
It's that enough people and the price have to go together. I think a lot of people say, well, everybody's going to want this, but they never factor price into it. That's one mistake I see happen. The other price, and I think this may come with, we just raised millions and millions of dollars, is we've seen over the last 15 years, a lot of startups that have offered premium products at discount prices. And then they think that that's going to make them big and everybody will want it because it's basically they're paying people to take their product. And so a lot of people raise their hand and say, great, pay me to take your product. I'll take your product. But as they have to shift to making money on it, it turns out there's not enough demand once they charge fairly for the product.
Right. And there are so many places where this thing can go wrong. And one that I have seen also several times is where the market demand and the pain point is actually demonstrated. In the IT world, you go around and talk to 50 different companies and IT departments and CIOs, and you say, if I build this thing, would you want it? And then they say, absolutely, I would want it. Would you pay, X dollars for it? Absolutely, I would. But then you actually don't manage to build it. What you build doesn't actually do what they thought you were saying and what you thought you were going to do. And that is also part of the whole product market. Both sides have to be there. And I think it's a very significant phase in a startup. And if you don't succeed coming out of that phase, you kind of have to go back to the drawing board and either change plans or go build a different product.
There was a type of research that we did at Atomic that was highly successful for our clients, but it essentially involved within a focus group setup running a sample sales pitch. And we structured it. It wasn't actually a sales pitch. People would stand for that in focus groups. But we had a nice way of doing it that people would accept. And it's interesting to me because I've always wanted to somehow offer that outside of just what we were doing. But, I didn't have a position or a situation in the market to break through and get that offered. But what I found was that it's, a lot of research is done based on marketing, where we go out and present, okay, here's kind of the product. What do you think? A sales pitch is a bit different because you have to satisfy objections. So we would take a whole process where we'd start up front with, okay, here's factors that you might want to be informed about that maybe help make the problem clearer. Is that important? And find out about what has to be done even to prepare the ground for your sales pitch. Then we'd kind of present the concept and ideas and then walk through and start exploring additional detail about what was going to be in the product. And through this, we're looking for what things move people, what things don't move people. Eventually, a lot of times we'd ask them to take a set of features and rank them in order. What ones matter most to you? And eventually get to a point where we would ask them, and our price approach was to say, because these were all retail, but you wouldn't have to be at retail for this. We'd say, what do you think the company would charge for this? Right? So it's not personal for them. They don't have to kind of that one's separate from them. And they're able to say, well, I think this will be on the shelf at 150. And then we'd follow that with a question of, what would you pay for it? And if there was a big gap between, it'll be 150 on the shelf, but I'm not paying more than $5. If you find a lot of people doing that, then you've got an issue that you have to solve. And I found that research really, really productive, but it was kind of, in the world of the, hoping for scientific marketing today, where some study is going to come back with absolutely conclusive results, people were frustrated because it's focus groups, it's qualitative. But we learned so much through it. I always wondered why more startups didn't try to do stuff like that. Some of it is because we walked some fine lines in terms of market research best practices to make sure we learned what we needed. So, we were willing to change what the sales pitch was from focus group to focus group based on what we learned. When you learn, hey, that doesn't work, rather than, spend $25,000 with the rest of the focus groups, just confirming that it doesn't work, we would change things to try to find what does work.
I think that whole area is absolutely everything. That strategy, that go-to-market strategy, pricing strategy, channel strategy, et cetera, et cetera. The other thing I want to point out in this section is that small companies would be best advised to go meet existing demand. They don't have enough wherewithal to go create demand and wait 6 months for that demand to germinate. Larger companies can do that. If you're a multi-billion-dollar company, you may very well say that this is where the market is going. We're going to build a product, and you realize that your customers are going to start warming up to it because you're showing the way, and they're going to understand that that's where it's going to go next. And you have the wherewithal to stay with it and eventually make it happen, and you have the first mover advantage. Look at what Meta is doing with metaverse and augmented reality, virtual reality, and the goggles and all that. And even though they may dial it down now that economy is bad, they still have the wherewithal to go push that. If you're a startup, as kind of our big learnings was some years ago, and the VP of sales at the time gets credit for this, today's pain point is today's PO. If you don't have a pain point today, you're not going to spend money on it. And as a startup, as a small company, you can't afford to wait 6 months until that happens.
Another issue that comes into cost here, and this is one of the places where I think that the product market fit discussion needs to expand, is I have worked with products where we had to prepare the market. So, for example, the Drill Doctor drill bit sharpener, an ad agency had done a demand study on it, and they went out and did phone research and described briefly what the Drill Doctor was and asked people to rate on a scale of 0 to 5 how likely they'd be to purchase it. Well, they all came in the 2s. So the average was in that area of walk away, you can't sell this level. We developed advertising because we figured out that the problem was just that people didn't know why. They didn't know why they should care. And that's back to things like clarifying the problem, showing people, kind of helping them see how important that problem is. I mean, not all problems immediately flash to people like, oh my God, that's a big problem. There's a lot of things that people say, oh, I don't know, I get by with it, I'm okay. And there's a whole nother discussion that has to happen before they go, wait a minute, you can do that and get excited by it. So we went out and did this communication based on the Drill Doctor and based on building the value of it, telling people, there were 6 benefits that we came up with that were core to why the benefits of using a drill bit sharpener and things like that. And they sold 3 million of them over 8 years because that was the key missing thing. Yeah. So one of the problems I hear when somebody says, well, we don't have a product market fit, there's always a question of, is there communication needed that would give you it? And it's not always there. Sometimes it is. And I think the one problem with the product market fit discussion is it doesn't leave room for what if you need to develop the product or the market? What if you need to develop the communication so that people understand why they should care?
Right.
That makes it difficult.
Well, you do have to design it well from the get-go and communicate it well and communicate the right product, not the wrong product. And if you don't do that, if you're a startup, you just don't have time to go back and redo it because you didn't do it right. More often than not, you're just going to have to pivot.
I think that's true as the startup. But I think it also leads, I guess the thing that pains me as a guy who does love products is there remain far too many good products on shelves that have been rejected because they failed to communicate about them. And that's big companies as well as little ones. There's a lot of things that have been on the market that were really good, and yet because they never communicated about them, The decision was the product's a bust, when it's not the product that was a bust, it was their marketing approach.
Absolutely. Absolutely. So good segue into another, what appears to be a recurring section.
Yeah, now it's time for the data music. It's time for a data discussion. And you're going to lead us off on that, right?
Well, on project works that I'm involved these days, data is figuring really prominently. So I'm interacting with it on a daily basis, and I'm getting some learnings or reinforcements of previous learnings that I think would be nice to share. So I won't belabor it, and maybe we come back at it every week and touch on it a little bit. But the 2 or 3 themes I want to leave with this episode is what I call good data and same data. Is that, are you looking at good, valid, accurate data? Are you measuring what you think you're measuring? Did you change the definition of variables 3-4 months ago, and now your year-over-year projections are invalid? What is the granularity of the data? Is it valid to really look at weekly or daily, or should you go to monthly and annual? Do you look at it as bar graphs or time series so you can actually have a feel for what has happened? But at the end of the day, quality of data is really job one. If you don't have good data, it's a big problem. You will be ruled by data. It is very impossible to resist the data from ruling you. It influences, your thinking. So if it is junk data, you're just being ruled by junk. You want to avoid that. So the second one is same data. Are we all looking at the same data? I've been in several meetings where different attendees have access to their own sources of data, and they come at what they're looking at. And then the other guys may not be looking at the same thing. So they're not getting the same signals. They're not sensitized to the same thing. And then the meeting ends up being about, can we all look at each other's data? So it really behooves you to make sure that everybody's looking at the same critically important data on an ongoing basis, such that they're all getting the same signals. Now, crafting that kind of a view is really difficult, because it is really hard to visualize data such that it has commonality, but also has relevance. So you may need 2 layers of data at a minimum, where you could double click on the high end to see what's underneath. And if that's particularly your department, you can double click many more times. But at least the high top end of the iceberg is common, and it's leading you to the same direction. Now, I have probably half a dozen other categories like this, but good data and same data are 2 themes that we've been driving.
I'll tell you, same data could sometimes be hard, even at the very top level. I mean, let me explain an example I ran into once, which is I worked with a client and they were selling through retail. Our focus as an advertising agency was always demand, which is how many units are flying out the door of retail. So we had sales, which was how many are being sold by the retailers. Our client's main concern was how many are going out their doors, because that's how they got paid. They got paid for the orders that were shipping from their factory to the retailers. And of course, both of those are called sales, because they're both sales. And yet they're very, very different sales. And so we had this one kind of mini catastrophe where they called me up and they said, our sales suck. And, something happened. I think we fell off the cliff. I think we've overdone it on demand, and our demand has failed, and now we're dead in the water. And I said, oh, that's funny, because that's not what our data shows. And what we were comparing is they were looking at orders from retailers to the company, and we were looking at sales to customers by the retailer. And so what we actually had was a situation where customers were continuing to buy at the same rate, at the rates they always had. But product going out to the manufacturing facility doors was way off. And so that's where the problem was. But it was extraordinarily misleading. And I think in this case, I would fault them for believing that the market had failed because, out the door manufacturing sales were down. Because that's not going to tell you if the product has failed. If the product's failing in the market, it's got to be what the retailer is selling. And it turned out they had a problem where they were overstocked in retail, and had to wait for that to fix itself before they would get a good rate of sales going out their own doors again.
Having a perspective across the entire chain is very important. And it's sometimes really hard to have some piece of critical data because you don't own it and it's somewhere else. And how can you take steps to actually instrument and capture that data becomes part of the discussion. And then that's a technical, manufacturing, IT. They're not even in marketing per se. And if you're using the wrong stack, or if you're using the wrong computer language, or you don't have the person who can do this, suddenly you are simply unable to take action on it anytime soon, because of these other external reasons.
I think too we have a general challenge of, I mean, it's not that we're short people who can do data analysis. What I find we're short is kind of the data savvy. And I guess there, I mean, it's like in this case, when they called me up and said, oh, we got this huge problem, and I didn't have the numbers at my fingertips, but I'd been tracking the data well enough to have a gut sense of, no, I think that's wrong. And the problem I found is that that's rarer than you would guess, which is people who are nimble enough in dealing with data to have a sense of what the numbers should be, right? So then the little things that say, wait a minute, that doesn't add up, send us off to search. And that's what data should do, which is enable us to go find issues.
So you've alluded to this in previous episodes. I think as a marketing professional, you must make it your priority to understand the business. Where does revenue come in? You need to be a business person before you're a marketing person. You need to understand where revenue comes from, where the objections are, blah, 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 blah. As a marketing leader, it is your responsibility to make sure that your team is aligned with business metrics and business objectives and the flow, how business happens, right? And get them involved. Challenge them to do this because, you may be surprised. I think that really is critical because otherwise you're not going to understand the significance of a piece of data. If you don't do it well, it all looks cosmetic. You're just looking at data because it looks good or because you feel it does something, right? And if you do it really well, then you know that, the data I really need is that. The way I need to steer the ship is this. And then you devolve the decision making such that everybody in marketing is able to make these proper business decisions. And after a while, things become significantly easier because now you have help. Your team is helping. Yeah.
I'm writing about the need to look at the company whole. What is the whole thing that we're after?
Yes, exactly.
And I think that's really what this issue is, which is one of the criticisms I have of the modern metric environment is that it loves to break things into micrometrics. And at some point in time, those metrics become meaningless because they're disconnected. So what you want to do in marketing is you want your people to have an understanding of, I need to do this because it contributes to the whole in this way. They don't have to be experts at seeing what the whole is, but they are experts in their world. And so you want them guided in a way that they understand the whole. And that's one of the problems I have with the infinite breakdown of metrics is at the top level, we all care about the right thing. But all of a sudden, when you get down into productivity numbers, well, yes, productivity is important, but do the specific numbers you have any meaning in context of the whole? If you have those productivity numbers go up, do you make more money? Oh, well, maybe not.
Right.
You may not. Well, in which case, getting those productivity numbers to go up is completely disconnected from the result you want for the company. And you've gotten to that point where you broke the numbers down so far that you've lost meaning.
Now, this is one of many places where complexity shows up.
Yes.
And interaction of many variables and changing situations. So complexity is a theme that keeps recurring. And, let's just keep pointing it out every time it comes up until we feel obligated to actually devote a whole episode to it. Now, I have a question for you. Is the store the media?
Oh, boy. Oh, Shaheen loaded up a good one here. Yeah, there was a Twitter thread that came out, and it was motivated, first of all, by a Gartner graph, because Gartner graphs tend to do that. And they had, what is the one they call the hype cycle. And so they put a whole bunch of stuff on the hype cycle around digital advertising. And right now they put near the peak of the hype cycle, they put retail media networks. And so Shaheen and myself and Steve Dennis, who's a wise retail guy, we all got into a rather lengthy discussion about whether the store is media, because there have been people for a couple of years saying, well, the store is media, the store is media, the store is media. And it's worth talking about that, partly because it comes, we get into one of these places where it's hyped and there's loose language. Shaheen, your best question was, are there any definitions here?
Yeah.
And we found what? There weren't, right?
Well, I'm sure somewhere they might exist, but I think it would be important to look at what they define these things as. What do they mean when they say this? The other thought was that some of these concepts need to get circulated through the hype cycle a few times. Mm-hmm. Instead of going to plateau of productivity, they hit a winter, right? And then when they come out of that winter, they go through the whole hype cycle once more. AI as a whole concept did that. It was really hot in the 1950s, and then it sort of languished, and then it sort of disappeared and hit the AI winter, and then it came back again 10 years ago with deep learning, and now it's doing absolutely amazing things, but probably will get some kind of a disappointment somewhere too. So anyway, that's the other thing.
Well, yeah, because actually, I remember with AI coming back in the 80s with neural networks. And there was a lot of work in the late 80s. I have a guy who worked for me at one point who went into that. And there was a lot of productivity that came out of that, effectiveness for companies in credit card. Is this an unlikely credit card charge and things like that? That was effective and useful, but it wasn't AI, and now we're in another cycle of it.
Well, I think what fixed it there was that the notion that these neural networks can be way deeper than we thought they could be. Instead of 4 stages, 4 layers, maybe they could be 35 layers. Maybe it could be, right? And that became sort of the deep in deep learning. It was the depth of the neural nets. But then it was so computationally intensive that it needed GPUs and accelerator technology to catch up with it. And then you needed a lot of data, a lot more than you thought you did. So the confluence of those things only happened about 10 years ago, when it just suddenly sparked, and deep learning is now the foundation for a lot of things and led to generative, etc.
Are you suggesting there's a possibility that retail media is a bad idea that just won't go away? Oh, wait, no. I didn't go there. I didn't go there.
Well, my comment was that in the digital world, everything is media. Mm-hmm. And if you think of it that way, well, then everything is media, and store is media too, because guess what? Somebody created the content and the imaging, and they put it on a website, and that's no different than a magazine website, but it tries to compel you towards different actions. So from that standpoint, it's media. A physical store would find it a lot more difficult to be, quote, media, as much as it does communicate things intentionally and unintentionally. So if that's what we mean, it's valid, but also maybe not so useful.
Yeah, where I have difficulties with the idea is that as an advertising, with a lot of experience in advertising, you look at media as something you purchase for a purpose, right? I mean, you go get media and you use it for a purpose. And the idea of store as media has thrilled a few people in the retail world, the idea that they could get a secondary flow of money, or tertiary or quaternary. I mean, they have all sorts of little subtle ways they make money in retail. But in terms of the physical store, I just don't see that happening. On the other hand, to give Steve Dennis's points, which are valid points, are things like the store itself is communication, because we know that, say, Macy's closes a store in an area. When they close that store, internet sales from that area also go down, meaning that driving by the store is a type of communication, and people get reminded that Macy's exists, and next time they need to go search for something, they're more likely to go to Macy's.com than if they hadn't driven by the store. And so we know that. We also know that there's a lot of specific communication that can happen really well at retail. Final things before close, resolving open issues, final objections. From all my work, problem is, if you have a new product, you need to get people aware of it before they go into the store. Once they're there, you may still be more communication, but you need them aware of it before. So looking at this then, I actually went and looked for definitions, and I came up with one. And what I found was a definition that says a retail media network happens when retailers set up an advertising platform on their website or within their network. So all we're talking about is advertising on retailer websites? Well, that's a whole different thing. I mean, and now I'm still looking at going like, so in other words, it's Amazon media on my website. And of course, now I'm especially skeptical, because I know that Amazon's media, while it's making Amazon a bunch of money, is of suspect value in the market. They make money, but for the people who are buying media there, it's really a last touch attribution boost. So, what happens on Amazon is people pay for advertising, but that advertising is all about making sure that when somebody searches for a DeWalt drill, the first thing that shows up is from Makita.
Right.
And, in fact, my experience is, after advertising got implemented on Amazon, when I put in a search for a DeWalt drill, the first 3 pages are for anybody other than DeWalt. DeWalt only begins to show up on page 4, which is all a little frustrating. Not that I'm bitching. Okay, I'm bitching.
Well, no, I think it adds a lot of friction. And I think the customer experience on these digital platforms have deteriorated exactly because the priorities have now been mixed. Because whereas at some point the priority was, what is the fastest way for me to get you to buy something, has now been changed to, what is the fastest way for me to get you to buy one of these advertised systems. And that's a different goal. And the moment you change the objective, especially in a digital format, you're a completely different ballgame. And then you see what you see. And what do people do? They probably just scroll straight to the second page. They get trained after a while to see what is an ad and what isn't. Remember those in-place ads on digital news? Initially, you kind of would stumble on it and wonder whether that's part of the article or whether it's an ad. And after a week, you learn that it's just an ad. And now you just naturally ignore it and move on. So how do you train your customer base to actually behave in ways that accelerate buying is really a point.
Well, I think we also have a challenge here that this one fits into the idea of everything is media that has been popping around the ad business for 25 years. I mean, it's not new.
That's my view.
Yeah, but at the same time, I, as a person, am very turned off by that idea. You know, I go through the Chicago airport at one point, and the escalator handrail that goes around, every 6 inches has a logo on it. You know, same logo. And you think, I mean, I'm traveling. It's painful. It's a lot of work and all this stuff. I really need that additional visual noise. How much does the Chicago airport get for that? Is that really helping the person that bought it? You know, you start looking at those questions and think, I don't know that this whole idea works. But it got worse when I boarded an airplane and was traveling with my account director and a VP of accounts. And we sat down. She was at the window. I was at the aisle. And we lowered the tray between us to put our coffee on it. And it has an ad for Dramamine. And I thought, how would it be that anybody would be happy sitting through a 6-hour flight looking at an ad for Dramamine? I mean, that just seems so horrible. And I think that a lot of advertisers and a lot of people who are trying to make a little bit more money, you know, such as the airlines, forget how kind of humanly abusive some of that stuff could be.
Yeah, absolutely. And it really, in principle, should lead to lower sales because now you have alienated someone for life.
That's true.
And I don't know
I'm not seeking out Dramamine anytime soon, you know.
Well, if you're the vindictive type, you say, that's it. I'm never going to buy from you just for this infraction.
That's right.
So you got to be careful about those things. Anyway, good.
Absolutely.
Maybe this is a good time to conclude this episode.
I think it is.
All right. Thank you, everybody, for listening. Look forward to the next one. Thank you, Doug.
Thank you, Shaheen.
That's it for this episode of the Marketing Podcast. Every episode is posted on orionx.net and shared on social media. Use the comments section or tweet us with any questions or to propose topics. If you like the show, rate and review it on Apple Podcasts or wherever you listen. The Marketing Podcast is a production of Orion X. Thank you for listening.